attendee for our Earth Day 2022 demonstration of net zero cloud and sort of presentation on greenhouse gas accounting. In the background, I have as my production assistant today, Dan Connors. He's actually our CEO. Dan, can you confirm that we have an audience that I'm speaking to? Do we have people signed in?
It looks that way, yes.
Okay, fantastic. All right, well then we will proceed with our regularly scheduled program. So I was listening to a podcast this morning, a Green Business podcast, and they were saying, you know, Earth Day from a sustainability perspective, it's kind of passé. It was something that was really shifted the paradigm of how people were thinking when it was first launched in 1970. Earth Day 1990, when I was 10 years old, is a huge day in my life. That's the first time I really was introduced to concepts of environmentalism. But here at Green Impact, we like to think that every day is Earth Day, and I hope that those of you who are attending our webinar today and are interested in the possibilities of sustainable business and sustainability for your business will think of every day as Earth Day as well. So we have an agenda here today. We're going to start with the big picture. We're going to do a crash course in greenhouse gas accounting before delving into the business reasons for greenhouse gas accounting on multiple fronts. Then we're going to do a live product demo of Salesforce's Net Zero Cloud. We're going to do a product overview, and then we're going to investigate a couple user-specific scenarios to really see what this tool is capable of. This product is being actively developed by Salesforce. There's a ton of money that the organization has thrown at it. You may have seen an ad at the Super Bowl featuring Matthew McConaughey. So we will be previewing some future state features that are not yet available, but that we have a sneak peek for. Normally, when I do a product demo, I stop for Q&A. Because we're doing this in a webinar format, there's not going to be live Q&A throughout the presentation. However, if you have questions, please put them in the chat, and Dan will feed them to me at the end, and we will do the best that we can to answer these. We also have as a joining us on the webinar, our Chief Technical Officer, Jacob Gerton, and maybe he'll be able to field a couple questions as well. So let's dive into it. So greenhouse gas accounting. Very simply put, this is a process by how an organization measures how much carbon dioxide equivalent. An organization can be a government, it can be a company, it can be any entity. Carbon dioxide equivalent is the currency of greenhouse gas accounting. If we use financial accounting as a metaphor, we're going to envision a company that has divisions in a couple different countries. Perhaps we have revenues and expenses in pesos, revenues, expenses in euros, and revenues and expenses in US dollars. Well, to make our books make sense, we convert all of the revenue and all of the expenses into a common currency. Well, in greenhouse gas accounting, that common currency is carbon dioxide equivalent, or CO2e. The equation for calculating CO2e is pretty simple. You multiply your energy use by what's called an emissions factor, and you get carbon dioxide equivalent. If we're thinking of this in terms of financial accounting, this is our revenue or expense, and this is our exchange rate. To use a very simple example, 18.84 million British thermal units of natural gas multiplied by the emissions factor of 53 kilograms per million British thermal units of carbon dioxide is equal to exactly 1 ton of carbon dioxide. So we've taken our energy usage, multiplied it by our emissions factor, and we've converted it into our common currency of carbon dioxide. So when it comes to greenhouse gas emissions, there are common types of emissions, and they're recorded in 3 different scopes according to the Greenhouse Gas Protocol. The most important thing to take away from this slide here, in addition to our CO2e equation, is that types and scopes are not the same. We're going to talk about the difference between these two things shortly, but first we're going to talk a little more about emissions factors. So all around the world, different organizations in different countries use energy in different ways. And so the emissions factor, or thinking again of our exchange rate, is going to depend not only on the type of energy being used to produce energy, but also the region of the world that is coming from. So one of the real values that we find with the Net Zero Cloud tool is the onboard data sets that it comes with that are actively updated. So with Net Zero Cloud, we are based on the internationally accepted greenhouse gas protocol, and we have access with just a couple clicks to comprehensive data sets from the U.S. Environmental Protection Agency, the U.S. Energy Information Administration, specifically the Commercial Buildings Energy Consumption Survey, CBEX. It also has data from the International Energy Agency, along with UK-specific data from the Department of Business, Energy and Industrial Strategy, along with a comprehensive data set for international electricity use through Electricity Map. So, types of greenhouse gases. On the left-hand column here, we have greenhouse gases. We want to think of these as our different types of currencies. Okay, we have our chemical formulas here. The final column here, GWP, stands for global warming potential. This is our exchange rate. So since carbon dioxide is our common currency, it converts to itself at a rate of 1 to 1. Methane, aka natural gas, has a global warming potential of 28, so it converts to carbon dioxide at a rate of 28 to 1. As we move down, we get increasingly exotic chemicals, which have increasingly high global warming potentials. So thankfully, we don't use too many perfluoromethanes in day-to-day business, but they do exist and they can be accounted for in greenhouse gas accounting. So these are types of greenhouse gases. Now we're going to talk about the three scopes of greenhouse gases, the three scopes in which greenhouse gases are recorded in greenhouse gas accounting. So the scopes of greenhouse gas emissions, according to the Greenhouse Gas Protocol, exist on a continuum. There are three of them, scopes 1, 2, and 3, and they exist on a continuum of direct responsibility to indirect responsibility. An organization that is doing greenhouse gas accounting will report on all three scopes, but it's understood that there's a different degree of responsibility for these emissions. The mnemonic that we use internally at Green Impact for scope 1, 2, and 3 is burn, buy, churn. Scope 1 is direct greenhouse gas emissions coming from owned assets. The most common source of scope 1 emissions is natural gas use in buildings owned by an organization. So we have our little fire icon up here. So natural gas in owned buildings is the most common, but if we're talking about owned assets, that can include other examples of direct fuel usage, usually corporate vehicles. Think company cars, or perhaps some corporate shuttles to bring employees to work, or in some cases, even corporate jets. Scope 2, less directly responsible, but still included in our reporting, is indirect emissions that are either bought or generated at leased facilities. We have our electricity icon up here because the most common source of scope 2 emissions is electricity use in owned buildings. If we want to think about electricity production, the vast majority of electricity production still comes from fossil fuels. When we turn on the lights, that means that something somewhere is on fire to provide us that service. However, we are not literally combusting any fuel sources for our electricity, so this is less direct responsibility for it. If we were operating at a leased facility, our scope 1 emissions would actually become scope 2 emissions when it comes to natural gas use. Scope 3 is churn. This is all emissions in the value chain, both upstream and downstream. Now, this is the least direct connection, but it is actually the largest category. So it's estimated that your average company, 92% of its greenhouse gas emissions come from a supply chain. So this is our churn, upstream and downstream. There are 15 types of scope 3 emissions recognized by the Greenhouse Gas Protocol. We're not going to get into the devil of those details today, but just a couple examples are product distribution, employee commuting, and use of sold products. So these are two examples of downstream emissions, but we can think of employee commuting as a type of upstream emission. If you're driving to the office, you are literally a human resource being delivered to your place of work for the purposes of doing business. Okay, so that is scope 1, 2, and 3, burn, buy, and churn. So this is a little complicated. Why on earth would a business voluntarily engage in greenhouse gas accounting? Well, there are three principal reasons. Hopefully people are doing it just because it's the right thing to do. Climate change is real, it's happening right now, and we are all contributing to it in one way or another. More compelling for most organizations, honestly, is the fact that it's good for business, this is our carrot, and that there is rapidly evolving regulations that companies and organizations need to respond to. This is our stick. So the good for business, it's actually pretty simple. If we think about operations management philosophy, we are trying to eliminate waste. Pollution is a clear form of waste. It's something we're paying money to produce. So if we increase our operational efficiency by eliminating pollution, we're going to lower our operational costs, which is going to result in increased profit. Very straightforward. Very compelling for some organizations is pressure coming from institutional investors. This is from BlackRock's 2021 annual letter. This is referring to what we just talked about with scopes 1, 2, and 3 right here. Any company that BlackRock invests in is expected to articulate how they are aligned to a scenario in which global warming is limited to well below 2 degrees Celsius. And companies should provide disclosure, including scope 1 and 2 emissions, along with accompanying greenhouse gas emissions reduction targets. And carbon-intensive companies should also disclose scope 3 emissions. This is the largest institutional investor in the world using this language. So it's not entirely surprising that regulators are taking note and starting to talk the same way. The SEC, 3 weeks ago, announced a rule that will force public companies to disclose their greenhouse gas emissions. This is on a national level. Internationally, the European Union is set to force all large companies listed on the European Stock Exchange to report their emissions beginning in 2024. Just this morning, I saw in time for Earth Day that Pennsylvania has been in the process of joining the Regional Greenhouse Gas Initiative for a while, but the climate rule by the Wolf administration here in Pennsylvania has been finally published. And so we would become the first fossil fuel producing state in the United States to price carbon. So this is the regulatory landscape. So when we go into our demo of Net Zero Cloud that we're going to do right now, we're going to look at it through the lens of two personas. The first is Sophie, who is a private sector director of sustainability. She oversees communication on her company's sustainability efforts to external stakeholders. And in her day-to-day role, she needs quick access to reports and data about greenhouse gas emissions. Once we're finished with Sophie, we're going to talk about James. James is a public sector director of sustainability and energy. In his day-to-day role, James needs quick access to multiple levels of energy usage data from the municipal level down to the meters of specific emissions producing assets. Net Zero Cloud can provide both these things. So I am going to switch windows and launch into a live demonstration of the product I have loaded in the background. So this is a version 1 Net Zero Cloud, which was called Sustainability Cloud. We're working with version 1 today because this is the version that is the most ready for primetime demonstration. As I mentioned at the top, version 2 is actively being developed. There are new features in development that are still in the testing phase, but they are on the release roadmap for the year 2022. So if I'm looking at this from Sophie's perspective, what I want to see is our climate action dashboard. So the climate action dashboard is built on top of Tableau CRM analytics. This is a Salesforce product that is separate from the core sustainability cloud, but you have licenses to access it when you purchase this product. It is a very powerful data visualization tool. And so we're going to dive into this now. The data that I'm looking at is actually based on Salesforce's own energy usage. This is sample data. The sustainability net zero cloud product was actually developed for Salesforce's own sustainability usage. Believe it or not, this multi-billion-dollar company for a long time was doing their greenhouse gas accounting in Microsoft Excel. And when you think about a company of that size with all of the assets that they own or lease and all of the business associated travel all over the world, that becomes a very complicated problem to handle in Excel. So they built a custom tool for themselves to use in-house at first, and then they brought it to market. What we've been told by people who work on the product is that when they were doing it in Excel, it took them 6 to 8 months to do their greenhouse gas accounting. And now, with the help of Net Zero Cloud, it's a process of 6 to 8 weeks because of the ease of which you get data into the system and how you can access it. So here is, at a glance, the total emissions of Salesforce across all time and all scopes according to the sample data. I cannot vouch for the accuracy of the sample data. I do think that it's a little bit small and a little regular, but it's still very good for our purposes today. So we can see that according to the sample data entered into the system, Salesforce has emitted 49,000 tons of carbon dioxide equivalent. This is the total carbon footprint. We can see that the vast majority of it is in this blue part of the circle in the commercial building sector. We can also see a very small number in a purple slice associated with travel. And this, to be honest, is why I think that the data set may be incomplete, because I know that Salesforce, being a sales company, has a lot of business travel. But that's a bit of a digression. So Sophie wants to see, for example, everything associated with commercial buildings. She can see it at a mouse. She can see it on mouse over here, or she can click, and the dashboard will automatically filter. And we can see the breakdown inside the commercial building sector. We can see it broken down by offices, and then we can see other types of building as well. If Sophie wants, she can filter by business region and see the emissions associated only with this business region. I'm going to reset that really quick to show all again, and she can drill down into a specific asset. So if Sophie wants to see what's going on at the Salesforce tower, we hit apply, and these are all the emissions associated with one particular asset in the real estate portfolio of this company. So I'm going to scroll down a little bit, and we can see what the Scope 1, Scope 2, and Scope 3 emissions for the Salesforce tower are across time. So in 2017, 2018, and 2019. You can see that this is remarkably consistent. If I want, I can drill just into Scope 1 by clicking on the blue bar here, and we can see that it's all of the Scope 1 emissions. Again, remember, these are our burn emissions, are associated with commercial office space. That makes sense because we are looking at one particular office building. So I'm going to reset this to show all of our assets and all of our business regions, but that didn't quite work. We'll do this here. There we are. Okay, so this is just a top level dashboard, that the top layer of the dashboard that Sophie's using. We can actually drill down and we can see additional layers of data. So we can see the breakdown between not just Scope 1, Scope 2, and Scope 3. But we can also see the two different ways of calculating scope 2 emissions. There's the location-based method and the market-based method. We're not going to get into the specific differences between these calculation methods, but they're both accepted according to the greenhouse gas protocol. All right, but what I want to show here is we can actually look at our top carbon contributors, and we can even drill down here, and we can see our regions. Okay, so we can see the top 5 contributors sorted by geography. Okay, so this is the type of data that Sophie's looking for. So what is she going to do with it? Well, let's say that Sophie wants to export the data and share it. So we have our helpful graphic inside the dashboard. How do we get it out and how do we show it to folks? Well, it's very easy. So we drilled down into the specific report, and we can, with our drop-down menu, hit the share button. Now we can share. We could post it to a feed internal and with inside of Net Zero Cloud. We can address it to a specific group of users or even a single individual. Or if we wanted to, we could export it as an image, or we can export it to Microsoft Excel. I'm going to close that out. We're going to return here. But let's say that Sophie doesn't just want to share data. She wants to track data. Well, she can set a notification. And this is simple logic through a click menu that should be easy enough for anybody who is comfortable with Microsoft Excel. We'll say, okay, I want to see when the emissions associated with this group hit a certain threshold. So if they're greater than this value here, looks like we're tracking at around 11 tons. Let's set an alert notification when it hits for 12,000 tons. And we have saved a notification. So I've spent a lot of time on the top level of the climate action dashboard. I want to go now into one other dashboard. So version 1 of the product comes with 3 custom built dashboards. Version 2 has 5 dashboards. I've seen them. They're quite impressive. And it's worth mentioning before we move on to the next dashboard that Tableau Analytics allows you to customize existing dashboards and build out any dashboards that you could need for your visualization purposes. So I'm going to go into travel and vehicles because Sophie's not just concerned with the emissions associated with commercial buildings, but she wants to track business travel. So I'm going to go into the business travel impact dashboard. Okay, so at a glance, here's what we see. We can see all the total emissions from travel translated into carbon dioxide equivalent, and we can see it broken down between a rental car and hotel stay. So if I want, just as with the sustainability action dashboard, I can filter data here and get information just about rental car usage in different business units across the world. I could also filter just by hotel stay values in the different business units and the different cost centers. I'm actually going to refresh our dashboard. And I should not neglect to highlight that we can filter based on fiscal year or calendar year as needed. So let's say Sophie is looking at emissions travel and from travel, and she doesn't just want to understand the information, but she wants to make an actionable, or she wants to recommend an actionable business decision to internal stakeholders. Well, what can we do with this here? So we're going to focus in on the rental car sector because, as we can see, according to the data in the system, this is the largest source of emissions from travel. So I'm going to focus in on this. And I can see that the EMEA's operation sector is the cost center that has the largest emissions in here. And I can also see that emissions from ground travel are not uniform. Okay, we can see that rental car emissions from Avis and Hertz are quite similar, but Hertz is producing less emissions from travel, and Enterprise is producing even less emissions per travel. So we would need to dig into the specific records to see the reasons for that, but it could be that there is a business decision to be made between choosing vendors that can result in lower emissions associated with business travel. So that is Sophie and her perspective. There is one thing I glossed over on the first piece that I want to highlight before we go to James's perspective. And that is, we're going to go back. The top level grants, we can actually see the percentage of renewable energy that is part of our electrical footprint. So this is something that is very of interest and of importance. So if Sophie wants to communicate, well, our emissions from our electricity are this much, but this much of this is coming from wind, and this much of this is coming from solar. And we can even drill in and break it down by, well, San Francisco is a great source of renewable energy, Dublin is coming close, and so forth. So Sophie is interested in communicating about sustainability to external stakeholders, and even communicating some sustainability data to internal stakeholders at her company. So we're going to switch gears, and we're going to talk about James's perspective. Sophie is no less of a sustainability professional than James, but James's role requires him to be more down into the nitty-gritty of the data. We're going to talk about that. So you may have noticed, as I have been scrolling through our various dashboards and visualizations, that the data here kind of falls off of a cliff. Well, this is because this is actually a hybrid data set. So we have Salesforce's data, okay, from the years 2017 to 2019. And then we have some specific data for a specific scenario that I custom built for our presentation today. So we're going to talk about that. But first, we're just going to overview the data structure that goes underneath these visualizations. So some of you on the call might be familiar with Salesforce, and you might be thinking, well, I thought Salesforce was about business accounts and contacts and leads and converting leads into contacts and making deals and tracking emails. That is Salesforce Sales Cloud. We're talking about Salesforce Net Zero Cloud, which is no less a powerful business tool, but has a different data structure underneath. So let's talk about it. The key piece of data in here is organization assets. So all of the emissions are associated to what are called organization assets. So I've clicked on my assets tab, and what I have here is a recently viewed, but I'm going to go to the all tab. Okay, so I can see all of the assets that are in my data set. And when I glance over here, I can see asset names that are listed as buildings. Okay, I can see boilers, and I can see business travel units. So an asset is anything that has emissions associated with it. So in our data model, we can have a specific building that is producing emissions along scope 1 or scope 2, burning natural gas or purchasing electricity. We can have a specific vehicle. So let's say company shuttle 2, and that is producing emissions out of its tailpipe. We can also have general assets. And an example of this would be business travel associate for this. So what we have here as a general asset is business travel for fiscal year for Salesforce and its Africa division. So assets are can be what you need them to be, and we're going to show a pretty complicated asset structure that James is going to use in just a little bit. But before we do that, we're going to talk about how we associate emissions and carbon footprints with a particular asset. For that, I'm going to return to Salesforce Tower. So when I click on this organization asset, I get a deeper level of data. I get our asset name, it's a building, it's an office. This is a scope because it's a company-owned asset. Remember, this is going to put natural gas usage in the scope 1 category automatically. I can track facility ID, lease ID. I can track not just the total square footage of the building, but also what percentage is occupied. If I am in a different country, I can convert it from square footage into meters. But we're in the United States. This is our business region. And this is the CBEX record I was referring to. So this is the Commercial Building Energy Consumption Survey. So this is going to come into use when we get into our custom built scenario. But because the system can actually estimate your data, the data associated with energy based on CBEX if there's not actual energy use records associated with it. And we'll get to that in just a second. So we have here all the details of our organization asset. I'm going to click on the Related tab. What I see here are carbon footprint records and energy use records. So a carbon footprint, remember, is all of the emissions associated with an asset over a specific time frame. So we have the carbon footprints for Salesforce for fiscal year 18, 19, and 20. You're already seeing the mouse over data. So you can see at a glance that we have 1 ton of scope emission, 1 ton of scope 1 emissions, and just under 1 ton of scope 2 emissions according to location-based calculation associated with Salesforce Tower in fiscal year 2020. I'm going to drill down into this particular carbon footprint because I want a finer granular level of data. So here we are. We can see that during Salesforce Tower during fiscal year 2020, it has 12 inventory records associated with it. Well, what does that mean? We'll click on our Related tab. Inventory records are carbon footprint items. I can see them all right here. I'm going to hit the View All tab. And so we have 12 records, and unsurprisingly, we have these are the 12 months of the year. So for something that has as predictable energy use and emissions, it makes sense to do it on a month-to-month bill basis. Just think of these as your utility bills. For something like the other assets we looked at, thinking of business travel, there's actually going to be a lot more than 12 energy use records associated with it. I can drill down into the specific energy use record as I need to, and we are recording all of the information about the asset itself. We also have an asset contact. So let's suppose that something was off in the Salesforce Tower in fiscal year 2019. We could actually look to see who to call. We could give Bobby a call and see if anything unusual is happening. They would explain an unusual pattern in the data at this time. Okay, so I'm going to zoom back out, and here is what we have at the top. So Net Zero Cloud is specifically designed to produce investor grade data. So there is a process of there's an audit process that is tracked for all carbon footprints. So the stages are asset confirmation, data collection, data gap filling, validation, and renewable energy allocation. Then you have your internal audit phase. And then, just as with financial auditing, if you want to produce investor grade data, you actually turn your data over to a third party. So we track the external audit stage as well. And then your carbon footprint is considered finished. So I'm just going to pretend that we did all of our due diligence and mark this as complete. So we have reviewed the asset structure and how it relates to carbon footprints and how it relates to energy use records using Salesforce demo data. So now I'm going to go into a specific use case because remember, James is actually a public sector director of sustainability. He has he is not only in a different role than Sophie, but he has a different need when it comes to the type of data and how he relates to it. So we're going to pretend that James works in Onondaga County, New York. This is where Syracuse, New York is located. So we have in our organizational assets an asset for Onondaga County, okay? And we can see this is a general asset. So I'm going to click into this. This is basically a placeholder asset, because what we want is we want to track the relationships between different entities within this county. So if I go to my related tab, I see, oh, we have a related asset for the city of Syracuse. I can drill down into here. And when we're in our organization asset for the city of Syracuse, we can look back up to the parent asset of Onondaga County, or we can drill down further into the data. I hit my related tab. I can drill into the Syracuse City School District. And again, I can look up a level, or I can drill even further. We have 5 high schools in Syracuse. So I always use those old-fashioned nested Russian dolls when I explain this. So of the 5 high schools, we're going to go down to a smaller doll, Corcoran High School. Going to drill in, and we actually start to see some asset, because we've moved from it being a general asset to a building asset. We get building level data. We have the square footage of this, we have the address, and we have the CVEX record as well. We also have more related assets, and we have carbon footprints associated with this asset coming from natural gas usage. We also have our asset contact. So if we needed to know what was going on with natural gas usage, if something seemed unusual in one of these carbon footprints, we could contact Mrs. Sharonda McKnight, who is the facilities manager the fake facilities manager at Corcoran High School. So we started our presentation with very powerful analytics and visualizations to really communicate large amounts of data very quickly to external parties. I want to show you just the native report functionality that comes with not just Net Zero Cloud, but with Salesforce in general, and how powerful that can be. So I'm going to go to my reports. I cooked up this report ahead of time, and I'm going to look just at Corcoran High School, which is where we had our 2 carbon footprints. So what I can see here is a bunch of different levels of data. So we have Corcoran High School, all of the natural gas associated with it, okay? And we can see that we put out 226 tons of CO2 one year and 228 another year. So if I go into this carbon footprint, I can see that I have 24 inventory records as opposed to 12. When I go into the carbon footprint and I view all of my energy use records, I can see that's because in the year 2021, we're looking at energy usage from boiler A and energy usage from boiler B. I'm going to move back. So what's powerful about this is you can slice and dice the data however you want it. So this is the total natural. So we're seeing, okay, natural gas usage at the high school for 2020 to 2021 is pretty constant. But when I'm looking at just the carbon footprints associated with the boilers, I'm seeing that it's pretty constant in 2020 for boiler A and constant for 2020 in boiler B. And there's a similar pattern for boiler B in 2021, but something seems to be off in Corcoran High School's boiler A, according to this carbon footprint here. So I'm just going to drill down into the carbon footprint record here. And we can see that, oh, we only have 10 inventory records associated with it. Now, if I were to look at 2020, where it's more in line with the emissions pattern that we would expect, I can see that I had 12 inventory records associated with it. So what's going on here? Go back, and I'm going to go click on my related tab, and I'm going to look at all of my carbon footprint items. I'm going to say, okay, we've got January, February, March. Looks like we're missing May, and by the looks of it, we're probably missing another month as well. So I know from my report that we have all the energy use records that we need, but for the purposes of this example, we're going to pretend that for some reason, we just don't have it. We call Sharonda. We say, hey, we're missing 2 months of utility data. Do you have it? And she says, I'm sorry, it must have got lost. Maybe somebody spilled coffee on it. So what can we do? Well, there is a data gap filling feature built into Net Zero Cloud where it will estimate your energy usage data based on previous usage and based on your CBEX records. So we're going to do that right now. We're going to go and we're going to just hit fill data gaps. And it's going to make the dots dance a little bit. And it says we're going to fill the daily average from this year's data. We're going to do it for natural gas consumption. And it's going to say, hey, based on what you've told, what we have in the system, we think this is where you should have been in May, and this is where you should have been in December. And this is our best guess, but it's better than nothing. So I'm going to hit save. And it's going to create energy use records of this amount of natural gas to fill these data gaps associated with this carbon footprint. I'm going to hit confirm. I'm going to hit done for now. And if I hit recalculate, we can see that our carbon footprint is now more in line with the pattern that we expected. I'll refresh my report, and we can see that everything is as it should be. So this has been a whirlwind tour of greenhouse gas accounting as a concept. And this has been a much more in-depth demonstration of what we think is the best on the market product for greenhouse gas accounting. That concludes today's webinar. Thank you very much for joining us. We are Green Impact. We are here to help you make sustainability good business. If you have any questions about us or this product, please contact me. I am Kevin Dole, the Sustainability Project Manager at Green Impact, and you can reach me at kevin.dole@greenimpacttech.com. Please check us out on the web at greenimpacttech.com. That concludes today's webinar. Thank you very much for joining us. We are Green Impact. We are here to help you make sustainability good business. If you have any questions about us or this product, please contact me. I am Kevin Dole, the Sustainability Project Manager at Green Impact, and you can reach me at kevin.dole@greenimpacttech.com. Please check us out on the web at greenimpacttech.com.